Okay, so let's jump in on the overnight. Well, thought we would give it a second here. I will do the best. Let me turn off the ringing here. Maybe I can control that a little bit better. There we go. Right. So there we go. So let's first take a look at the overnight and kind of where we're trending. The NQ is more interesting than the ES, quite frankly. Let's pull this over. Something interesting happened on the NQ on Friday in that we stopped one timing. So let's first look at the 24-hour on the NQ, and we'll see that we're just kind of drifting down. And okay, so these trend lines come from all the way back down from this break that we had, or the pause off the initial launch, right? Um, and it basically looks, this is called a megaphone, and it gets harder and harder to trade because the range tends to get wider and wider. And it can either, a megaphone can go one of two ways. Again, it's not a perfect megaphone, but it's close. So the problem with it is as it keeps getting wider, right? You get in here, it can do kind of either go up like this, or it can continue to trade down like that, and then we can just kind of follow this up, or we break to the downside, one of the two, or we have the exact opposite pattern on the other side. But it consistently gets wider and wider. So in terms of strategy for the day, so it's the last day of the month. There's very few participants, and what's most likely going to happen is that most of the year-end painting of the books has already been done. There'll be some squaring probably at the end of the year. It's rare to get it to roll over or run up hard right before New Year's. It can, obviously anything can happen, but it's rare. So we're expecting responsive buyers lower and responsive sellers higher. If we get what we had the last couple of days, ES isn't going to go anywhere. So we'll look at some of the characteristics. The first thing that I'll be watching this morning when I come in, I'm going to have my eyes on NQA because it was the only thing that was moving on Friday. But we have a clear down channel going, right? So one possibility coming into the day, right, is we come in, again, looking at NQ as my lead for ES because ES hasn't done a lot of things. So we're either going to get above this point and trade back to the highs right here, and then it'll be a question of whether buyers can get above. If we can get above, it's a thin market, and it'd be interesting to see. A lot of the thesis, or a lot of people's thesis for the market driving up as hard as it has driven up, is that money managers are net short stocks, long cash, and it's been the wrong trade, and they've been chasing up. As we get into the end of the year, they don't have a lot of incentive to chase up, and actually, if you think through the process, right, they may actually have they may have a incentive to do just the opposite, which is get cash long, net short via simply being out of the market, right, waiting for a pullback. It would be pretty easily defendable. So again, the thesis being because we're driving up so hard was because the managers were net stocks, net long cash, and it was the exact wrong position to be in. So the assumption for a continued drive higher, in my mind at least, would be that those guys still have to come in. There still have to be a reason for those guys to come in and drive up. I don't see it. Of course, we're just trading with the market, what the market's giving us, right? But clearly over the last 2 days, NQ has been weaker than ES. There's been no major technical damage on NQ. So the possible patterns that could work out for today, right? So the first one is obviously sideways trading action as possible. I would certainly watch out for that after 10:30. It was dead on Friday after 10:30. It's going to have to be really, really impressive price action. You'll see it. You won't have to guess at it. You'll see the thing actually moving a lot. So there's no need to, in my eyes, unless we're having massive movement, initiate a position after 10:30 Central Time this morning. So one of two things are going to happen out of the gate. We're either going to come in, and again, NQ is still pushing its lows, right? So we're either going to come in here, get a backside test of this downtrend line, and then we'll come for a test of this trend line. And my guess is we will probably break at this point if we keep opening as weak as we are, and it'll keep pushing us lower. We have to get back above this, right? And instead of chasing, if we get back above and say, no, it's going to fire off, right? The pattern that I'd want to look for is if we break this. Oh, that wasn't very good. Let's slow it down. If we can break to the upside on NQ, it would look like this. We get above, and then we come back in for a backside test right here. On a good rotation lower, that's probably where I'd want to take my long. In other words, I want them to prove to me that they can break this downtrend line, right? Other key areas for overnight. Obviously, this is our overnight high right here at 35.70-ish. We need to get above Friday's high as well, right? So right now the argument with the way we're opening, right, is we're actually opening weaker. We're below Friday's lows. And let's clean this up a little bit. Let's do this. Friday's lows, right? Friday's high area. And we're opening at the current time, we still have 15 minutes left, but we're opening near the lows and we're pushing into, let's see, Friday. We're pushing into Thursday's lows. Actually, we've pushed below Thursday's lows. We're pushing into Wednesday's lows at this point. And here's the deal. If we look at the chart, let me flip over real quick to the volume profile. Okay, if we look at NQ, part of the problem has been, look, there's no separation. If y'all can see this here. There's a couple of things that strike me. First of all, we've broken this little uptrend that we had going underneath here on the daily pattern, right? The other thing is we stopped one timing on Friday. So when the market stops one timing, that means that prior to Friday, the market was unable to trade below the prior day's lows. Doesn't have to close below the prior day's lows, just trade below. We did accomplish that on Friday. So what that indicates to me is there's still three possibilities. Possibility one, this uptrend continues intact. Possibility two, we're going to change behavior and go to a sideways market, and that sideways market could look like, when I say that, just so we're clear, right? We could trade all the way down here and just be going through a period where we zigzag through this and consolidate these gains, okay? That's option two, and probably more likely what I'll be looking for, right, is responsive buyers coming in right at the bottom here. Or if we get extended, we close this gap right here, and it goes and it gets extended down a little bit, but we net end up with the same trading pattern, right? What that would mean for me is that we could find responsive buyers down lower for good. So what that scenario would mean, let's go through that, right? Let's say this is going to be the new trading range on NQ. Again, it's all hypothetical. I have nothing that tells me that. I'm just looking for these things. What that would mean in a bigger picture sense would be that we trade from here down to here, back up to here in a continuous motion, up and down. And what that means is you can take good short positions at the high. Oftentimes those positions will look like they're just about to break out. They'll fail, fall back into the range, and trade back to the other end of the range. And then we get the exact same story below. Fail below on a good stretch, panic people out. It gets back up into the range and trades up. So when I have that thesis, I want to go back and see as well as that supported from previous price action. So let's go take a look real quick at previous price action when this has happened before. And it has just recently. When we look at the previous price action, this occurred right here. All right? And when we look here, this would have been in that same scenario. This would have been essentially this would have been gap fill and bottom of the range. And this would have been, whoa. Let's get rid of that really quick. Wow, let's try that one more time. Apparently my drawing skills are a little off this morning. This would have been gap fill, bottom of the range. This would have been the top of the range, right here. So this is the day we were looking at. We were no longer one timing. What resulted was the following day, we did get a long liquidation lower, right? Let's change colors on this. Let's go to yellow. We got a long liquidation lower. But net, and it did push all the way actually down to the bottom. This ended up being the bottom. So that would have been slightly off if I'd made that assumption there, right? But if we look, what did the ranges look like after this? Here, right, we were trending up. That trend up ended, but we really didn't roll over per se to the downside. If you look at the previous area of balance, which was down here, it never even really came close to hitting it. We kind of came into this breakout area to retest on one occasion. Really what we were doing is simply consolidating for continuation higher up here. And my guess is that's what we'll get. And if you'll look, all of these days provided great trading ranges. These are actually preferable to straight up or straight down because they give us nice trade location either way. So I'm hoping, and then by the way, there's another scenario that can happen. We can see that right here. Because this particular scenario is what's happened each time we've stopped one timing. We stopped one timing right here. We went into essentially 4 days of balance right afterwards. We stopped one timing. Here's where we stopped one timing last time, and this is a perfect example. Excuse me, this is a perfect example. We stopped one timing. The nature of the market prior to that one timing stopping, we were essentially headed straight up, right? You'll notice this is multiple days where we did not trade below the prior day's low in a row. We stopped one timing right here. We had one down day, right? And what the change in the nature of the market was this right here. Yes, even though we recovered and traded back to the top of the range very quickly on this day, right? We had one fast gap down day, and then we went into balance on NQ. But look at what happened when we got back to the top of the range. Instead of being able to take the strategy where you bought low and held all the way to the end of the day where we were closing on highs, we went into, if you can see this period right here, an extended period of consolidation where you could buy the lows for a push back to the middle and you could short the highs for a push back to the middle. Anyone who was trying to trade for a push out on these days, most of the days they got very frustrated and or they lost money. Right? So it's a little subtle hint like that that can really turn us on to, hey, there may be a change in the market. And while any one day may be directional up or down, net, you ended up with a range that was from here to here. And that range held for a long time, for almost a month, solid there. And it was a big change from the type of environment we had there. So if we go back and take a look again, we have something similar here. We've had a period of days where we really haven't been able to push. All of this has been on light volume. We now have stopped one timing. And so the question is, do we go into a large range here? Or part B would be we get a long liquidation and they take us all the way back down into the bottom of the prior range, right? Down to that 3460 area. I think that's less likely without some kind of news to drive it. So let's go look at ES now real quick, now that we're done with that. Because ES is much more mundane looking at this point. Okay. We are just slowly chopping up here. We've had 1, 2, 3, 4, 5, 6 days in a row where we've had up on this thing. And generally what I like to do is when I see all these days stretched in a row like that, I like to go back in history and see, well, how many days in a row can I get before we've experienced a big pullback, right? Usually it's 2 or 3 or 4 days up in a row. But we've had here 1, 2, 3, 4, 5, then finally the 6th day, right? And then we rolled over to the downside. We had a small pullback back to the bottom of the range, right? Essentially, you could argue in this particular case that there was an established range. We broke that range and then we just fell back down into it, right? And that this was the bottom end of support and that it held beautifully. Okay, so right now, if we look for that same situation, right? Where's support right now? Well, support is sitting right here. Excuse me. About 1805. Wow, my drawing's awful with this. 1805, 1806 area. And this area right in here is the top of support. It could dip down into this area, but my guess is, and we'll look at the 24-hour chart, this is going to provide support if we get down there. Given it's 30 points, it's highly unlikely that we get down there today, right? But bigger picture, this would be the bottom end of balance. This would end up, if this is indeed a high going into the new year, this would end up being the top end of balance. So from here, either one or two things are going to happen. The first thing that we have to see to decide that we're having new lows, right? So we have to get below Friday's low. I do not believe we have done that in trading. If we open here will have traded below Friday's low, so that'll be a change. But again, remember, most down days, and I know I'm a little disjointed here, okay? So remember what most down days look like. Even when we were having down days here, you'll notice we did not close on most days near the lows. Look through all these periods. These are all off of the lows, right? And oftentimes they're closing up back closer to the middle or the high of the day on down days. So what the pattern has been is, in this period in particular, was heavy sell pressure in the first hour up until about 9:30 or 10 o'clock when we've had down days, followed by that 10:30 to 1 o'clock slow grind back up. And then after 1 o'clock, it was a guessing match. We could have either shot this way or this way. This was the pattern on about 80% of the days, right? When we had down days. Or vice versa, right? We opened, in certain cases, like on this day, let's clear that. The other pattern's been we open down, push back up, or we open up, push a little bit, and then fall down all the way down, and then get responsive buyers on that pushback to close near the half to bottom third of the day. But closing on the lows has been very rare. The reason why I stress this is we all get excited when we're up so much that the market might roll to the downside, and it's best to temper that because there will be responsive buyers lower. Remember, even though the market's up a lot, there's a lot of people, particularly retail traders, and on a day like today, retail traders are going to dominate. Every institutional guy's already gone on vacation last week, okay? So the junior varsity is in control, and they're going to try and snap it back up from the lows. So also keep in mind, because the majority of professional traders have probably left already, that moves will be weird, and they will not necessarily be conjoined, meaning I saw a lot of people talking about this last week. Individual stocks were not necessarily following the indexes like they normally would, and that's because there's a big disconnect. From my understanding, even a lot of the algo houses have shut down already for the year. So it could get weird out there in terms of the relationship between one index and another index, or what you would normally see, like, for example, normally when we see NQ rolling over on Friday, we would expect ES to follow. But if you look at the price action on Friday, and we can do that, this was ES price action on Friday. This was NQ's price action on Friday. It just, while it did roll down from the highs, it never broke the lows, right? And when NQ broke the lows and continued to get sell pressure throughout the afternoon, ES simply didn't respond, right? And there's a lot of people, me included at times, that I'll look at the NQ and go, well, ES should follow to the downside. I believe I did call out a good potential aggressive short location of 1836 3/4. And that would have yielded you at best a whopping 1 3/4 points on the day. It just didn't roll over with NQ. So let's go into what would set up the day today for what we're looking for in terms of, are we short, are we long? Currently, ES is showing to open flat 1836.50. NQ is down about 5 points. That's not disastrous either way. Okay, so what has to happen today for us to see ES go lower? Well, first, we need to see it trade below this 1834 on a 24-hour basis. Okay, then that would be overnight lows. Okay, excuse me, that'd be overnight lows going back to Friday. If we look on the day session, right here, all the trend lines we have in place right now are heading up. But you'll notice we're just barely on the open. If we open here at 1836 1/4, we'll be just underneath this uptrend line that held us all afternoon Friday, right? So what I would like, the first thing that we have to see, obviously, is we'd like to see it trade below Friday's lows, okay? Until it does that, we really don't have anything new to consider. We're just balancing, right? On the upside, we have to get above this 1840 level, right? And most likely what we're going to get the majority of the day is going to be this right here. So if there's going to be a move, it's probably going to be a move done before 9:30 in the morning, and there's an econ number right at 9 o'clock Central Time that should push the market one way or the other. So the next thing I want to see is possible trades, right? If we do break, right, it's highly likely, that we come down into the the below Friday's low, below Globex, which right now is 1835. we get below these two levels, we could easily simply just push down into this longer uptrend line. And let me show you where that's coming from so you can see it clearly. This is the top of the former channel before we broke out again, before we gapped again, right? So if we got below here, right now that channel is sitting at 1834. We get below 1834, then the next push will be down to 1830, right? What we want to see trade-wise, let me try to line this back up. And let's move this over. We'll start over one more time. I apologize. Okay. Friday's low is essentially where Globex low is. This is the bottom end of this trend channel, right? What I'd like to see is us get a push below, maybe come into this support area, and then get a good rotation up. So what do I need in order to see that? First of all, my trades on the majority of the day require a 6-point rotation to have a high odd, the true high odds playing out. So in order to get 6 points from where we're at right now, let's look at the day chart. Hold on one second here. Right here. So in order for that to play out, we're opening at, let's say, 1836.25, which puts us right below gap fill. This is the white zone. In order to get any traction up, we're going to have to get above here. Obviously, that was a no-brainer today. My plan will probably be on the aggressive side to take a push towards the back of the white zone for a 2-point stop behind. Now, that's an aggressive trade and does not fall into the trade plan of the majority of the clients I coach, just FYI. But it's probably what I will do. As you add skill, as you're learning as a trainer, as you add skill, you can take more and more aggressive trades as you recognize them and you're more comfortable with them. But the point right now when you're building an account, right, to focus until you've built your account substantially, focus on only the highest odds trades available to you, and we're off to the races. And if anyone needs to drop, I totally understand. Feel free to do so. I'm going to stay on a little bit as I have in other mornings. So what I'd like to see, obviously, we get a fail at the white zone. Would be really nice if we get right up here. Fail, come back down from the lows, and then ideally, right, if we can push down from 1836, puts me right into 1830, right? So I'll be just past this zone right here and right into this purple area. I'll probably take a long first time in, and because it's thin, by the way, I'm lowering my targets by 2 ticks. I'm lowering my initial scale to 6 ticks, and that's simply because it is so holiday-like conditions. I'm not sure I can get an 8-tick rotation, right? So I want to make sure I get the first half of my trade off. So I'm looking at taking a less aggressive long here, and I'll take a long in this area. Again, measuring rotations, I want a minimum of 6 points rotation, right? On the upside, if we get above the white zone, that means we're at new all-time highs, right? Unless I see tick divergence in this zone, okay, I'm really shooting to take a short on a good rotation up right here at the back of this zone. This puts me at, let's see the rotation here. 1836.75 would put me at 42. Actually, I take it back. The back of the 44 would still give me an 8-point rotation, and I would probably look towards the back of this zone the first time through to take a short. It doesn't look like we're getting an open drive, but we'll be able to determine that in just a couple of minutes, right? And I'll certainly be taking a shot at a short up here, unless I just see something that says, hey, clear the decks. They're just driving higher. And what that would be a series of open drive candles, which we're not getting right now, right? So, like I said, I'd like to see a drive to the back of the white zone. I'm willing to take a 2-point stop back here. And that's really my trade plan. I don't expect a lot. I'd actually really be quite shocked if we even get back here. There's just nothing pushing it. We do have the econ at 9 o'clock. Maybe that'll help us get some push. And my primary objective, so let's go through the primary objective for the day. No one day matters. Number one, no one trade matters. You don't have to trade. This is a really slow time of year, right? The other thing we're keeping our eye on here, because I don't want to beat it with a dead horse, is the NQ, okay? So far NQ, we've opened below Friday's lows, and we're holding below Friday's lows. So it's something that I'll keep an eye on. But I certainly don't have an edge in terms of determining where the NQ is going to go, and I don't trust the down open, right? I'm really not going to trust anything until I see the econ data. The only area I'm looking at is if we can get a rotation to the back of this white zone. And keep in mind, this is going to be on a very small rotation. If you're taking this trade, it could easily push up to this 42, 44. It would not be take a major effort on behalf of the market. And also remember, these moves can get exaggerated because there's very few participants, right? On the downside, I'm looking at NQ coming into initial support down here at 35.30. And conversely, if we get down here on either one of these markets, I'll be looking for responsive buyers either side, whether we get into initial support first on ES or into initial support on NQ. I think either one can trigger responsive buyers in both markets back up. Importantly, only trade at the zone. As good as it looks, if you want to stay consistent, the odds are first. The highest odds are in the zone itself, right? Secondly, if you can get tick divergence, that helps with your trade. The third part is the extension, the size of the rotation. The size of the rotation is very important because what we're trying to do is capture our fellow traders making an error by essentially outrunning their supply lines and getting too stretched. That's where we have the best odds of making money. And then scaling. Instead of trying to get a 4, 5, 6, 8, 10 point trade, take your 2 points, build your account, and then focus on increasing your trade size as you move forward. At any rate, that's really all I have unless someone has any questions. I'll open it up to questions for a couple of minutes. Well, they give me a clue, right, Brian, as to the general sentiment. In order to get down, I mean, it's looking at the previous day's highs and lows is a way of tempering my emotion. Like a lot of people right now feel, oh, the market is absolutely short. You know, we're overextended. I have to short. By looking at the prior day's highs and lows, they're not necessarily key, right? They're not necessarily where I want to take a trade, long or short. But in terms of reasoning, are we actually having a down market or an up market, right? The first thing that I have to have is I need to be able to see that we're actually able to trade below the prior day's low. I can be as bearish as I want to be. If we can't actually trade below the prior day's lows, who cares, right? So that would be my first clue in looking for a possible setup to the short side or possible weakness. Just like on Friday when I had pointed out early in the morning, let's open this up. Okay, early in the morning I pointed out that we had traded below the first 5-minute bar. Now normally that doesn't mean jack, right? 99% of the time I could care less about it. But in this market, right, if we look at the previous couple of days, we've been unable to trade below the first 5-minute bar for 2 days in a row, okay? That doesn't mean anything. There's no technical significance to it other than it's a clue. If we weren't able to trade below the first 5-minute bar on all these days, I know for me, that means don't get overly bearish till you see that happen. And when it does happen, all it means is to look for a heads up that there might be a change in character. And that's all we have right now on both NQ as we have a heads up. There might be a change in character. And trading below the first 5-minute bar today means nothing because we don't have any kind of pattern of showing, hey, the market's respected this each and every time, right? So that's why I look at the prior day's highs and lows. And obviously to get new highs or to have a trend day up, right, we have to be trading above prior day's highs. Any other questions, guys? I think I laid out pretty clearly where I'd be looking for trades today. Okay. Well, I certainly hope this helped everyone out. You can hit me on Twitter or StockTwits. I'll be doing less today, not more. It's going to have to be a pretty sweet setup. I'll be looking for tick divergence. But the day before New Year's, I'm going to make sure I have enough liquor in the cabinet. So anyways, everyone, have a great day. Y'all can hit me if you have any questions on Gmail, Twitter, or StockTwits. And we'll talk to you later. Have a great day. Make a lot of money, guys. You're welcome.